Welcome back to Newsroom. For today's Business Matters, we have here with us Don Ma. Don, how's it going?
I'm doing well. How about you guys?
Pretty good. What do you have for us today?
A lot of things happening today, actually, so let me get started right away. Starting with Frontier can hear Verizon now. That's because Verizon has made an offer to buy Frontier Communications for $20 billion. Verizon's CEO described the acquisition as a strategic fit, and the merger will help Verizon strengthen its fiber network and its venture into artificial intelligence as well, and connected smart devices. Frontier has been upgrading and expanding its fiber network capabilities in recent years, as more than 2 million fiber subscribers across 25 states, and the deal is expected to finalize in about 18 months, but still needs to be approved by Frontier shareholders. Now, many discount stores are losing money hand over fist. That includes Dollar Tree, which saw its shares collapse 20% yesterday. And this slump followed the company's announcement last week that it dramatically cut its full-year forecast. Dollar Tree owns Family Dollar, which is also having trouble with its bottom line. Now, another discount store in the dumps is Dollar General. Officials there say a weak job market and inflation causing some low-income customers to stay away. Dollar stores adding that retailers like Target and Walmart are sometimes beating them at their own game by lowering prices on key products. After 3 decades, LL Flooring is going out of business and shutting down all its stores. The company, formerly known as Lumber Liquidators, filed for bankruptcy last month. Then it was unable to find a buyer. As a result, the flooring supplier will begin liquidating over the next 3 months. Sales at its remaining 200 stores are set to start tomorrow. Some 2,000 people will be losing their jobs, and the company plans to fulfill existing flooring orders within 30 days, but will no longer offer any new installation appointments. And in a letter to customers, LL Flooring said that this was not the outcome it had hoped for. Now, hiring cooled significantly in the U.S. private sector last month. Payroll processor ADP reported businesses added just 99,000 jobs in August. So the monthly estimate came well below economists' expectations, which were 141,000 jobs. Now, it was lower than July's total as well, which was downwardly revised by 11,000, standing now at 111,000. ADP's tabulations don't always correlate with the official federal jobs report, but they're sometimes viewed as a proxy for overall hiring activity. Now, tomorrow's jobs report for August will prove consequential in determining the health of not just the employment sector, but the whole economy as well. The NFL regular season kicks off today, but the cost of attending a game may have outpaced inflation. A sports betting study finds ticket prices increased by 44% between 2015 and 2024, while actual inflation was up 31%. Sports betting website freebets.com released the study. It said tickets to see the Las Vegas Raiders are up 129%, the largest price increase in that 10-year period. So to see the reigning back-to-back Super Bowl champions Kansas City Chiefs play, tickets are up 81% compared to 10 years ago. And the Baltimore Ravens will take on the Chiefs tonight in the first game of the 2024 NFL season. Former President Donald Trump spoke at the New York Economic Club today, touching on issues like inflation, taxes, and government regulation. The Republican presidential nominee addressed the state of the economy as he sees it under President Joe Biden and Vice President Kamala Harris. Listen.
1.3 million workers have become unemployed in the past 12 months. I don't know if anybody knows that. The typical American family has lost over $28,000 due to rampant and record-setting inflation. Credit card debt has reached the highest in history, with more than 1 in 3 Americans reporting they have maxed out their credit.
Trump also endorsed the idea of a government efficiency commission headed by billionaire supporter Elon Musk. That's if the Republican candidate can win the November 5th election. Listen.
I will create a government efficiency commission tasked with conducting a complete financial and performance audit of the entire federal government and making recommendations for drastic reforms. We need to do it. Can't go on the way we are now.
Today, Musk wrote on X, quote, "I look forward to serving America if the opportunity arises." The tech titan concluded his post saying, "No pay, no title, no recognition is needed." And Goldman Sachs analysts are comparing the impacts of presidential tax plans. Democratic presidential nominee Kamala Harris said she would raise the corporate tax rate to 28%. Republican nominee Donald Trump has proposed cutting it to 15%. And according to the investment bank, Harris's plan would reduce earnings for S&P 500 companies by about 5%. Trump's proposal would increase earnings by about 4%. In earlier statements, Goldman said that the broader economy would get a bigger boost with Democrats in the White House and Congress. The world's largest sovereign wealth fund is pressing Nike to revise its labor standards in certain countries. It's concerned about what may be happening in the brand's supply chain. The fund is now backing a shareholder proposal that Nike is telling investors to reject. Here's the story.
The world's largest sovereign wealth fund is pressing Nike on its labor practices. The foreign fund is using its influence to support a new shareholder proposal. The proposal would require Nike to consider changing its approach to labor standards in certain countries. Nike rejects the proposal and is recommending investors vote against it. The Norwegian Sovereign Wealth Fund says it owns over $1 billion in Nike shares, around 1% of the company. A recent report found that a Cambodian factory that works with Nike shut down during the pandemic. That left over 1,000 jobless. The report claims they owed $1.4 million in benefits. In response to the shareholders' proposal, Nike said it is already doing a lot in regards to human rights. NTD reached out to Nike but didn't get a response before airtime. The proposal will be voted on September 10th.
Meanwhile, some AstraZeneca employees are under investigation in China. The British pharmaceutical giant confirmed the news today. It said some staff members were detained by police as part of the investigation. Bloomberg News was the first to report the news. Sources told Bloomberg that there are concerns that AstraZeneca may have broken China's data privacy laws and distributed a non-approved liver drug. Illegally importing drugs in China is a serious offense, so depending on the value of the drugs and harm caused, the offender could face years in prison or even the death penalty. And staying on China, Chinese-founded e-commerce retailer Shein has divided opinion with its first physical pop-up store in South Africa. Shein has lured bargain hunters and spurred a tax change after rivals said the competition was unfair. Take a look.
Chinese e-commerce retail giant Shein has divided opinion in South Africa after opening its first physical store. Not only has it lured in bargain hunters, but it's spurred a tax change after rivals said the competition was unfair. Having opened in Johannesburg a month ago, it has attracted reams of customers who are eager for clothes and accessories, which often cost less than $10.
First kind of initial expectation from Shein was that it was not up to what my standard of good quality would be. So I think when I started noticing that, hey, actually this is like every other piece of clothing in my cupboard, I was like, okay, maybe I should just rethink this and then give it a try.
But prices of Shein's online-only goods are expected to rise in South Africa. That's after the country's tax authority increased levies to protect local retailers. Since Monday, people importing low-value parcels have been required to pay value-added tax of 15%. Shein's critics said this move will help level the playing field. And while some shoppers are saying why not to Shein's bargain offers, advocates for sustainable fashion encouraged shoppers to question such cheap prices.
When things are produced locally, they cost more because I think people are trying to do right in terms of labor laws and to give people a decent quality of life, which is not so much the case with people, with the suppliers who supply for the likes of Shein. There's still a big conversation there about the ethics around exploitation and just the churning culture that's happening there. So I think as a consumer, you also have to think to yourself, do I really need the sweater in 3 different colors?
A top car dealer in Britain says automakers are limiting fossil fuel cars to avoid steep fines. This is as they're falling short of electric vehicle quotas set by the government. More on this from NTD's Malcolm Hudson.
Car makers are being forced to limit the sale of gas, diesel and hybrid cars in Britain. The dealership chain Vertu Motors said manufacturers are delaying deliveries of the cars until next year. Why? to avoid huge fines for failing to meet electric vehicle quotas. Harry Wilkinson is head of policy at Net Zero Watch, which analyses the impact of climate change policy. He said this is due to the British government's zero-emission vehicle or ZEV mandate that was brought in last January.
And it set a minimum target for car manufacturers to make sure that 22% of new car sales this year were electric vehicles.
And the proportion rises steeply each year until it reaches 80% in 2030, with an eventual complete ban on new gas and diesel car sales in 2035. Car manufacturers who do not achieve this quota face fines of nearly $20,000 for every single car that goes beyond it. To meet it, Vertu Motors said car makers are also resorting to heavy discounts for electric vehicles. But car makers say they can't do this forever. Demand for electric vehicles across Europe has suffered this year due to high prices and worries about charging infrastructure. The Society of Motor Manufacturers and Traders warned that the British car industry could fall short of the electric vehicle mandate. It predicted electric car sales will reach 18.5% for the whole of 2024, still shy of the government's 22% requirement for this year.
If we can't even meet 22% now, and it's looking unlikely that we will make that target, then how on earth are we going to make 80% in just 6 years' time? It really isn't very long away.
The ZEV mandate is part of the wider drive to cut greenhouse gas emissions and provide car makers the certainty to ramp up electric vehicle production. The government is committed to move forward the ban on the sale of new gas and diesel cars to 2030. Wilkinson said the ZEV mandate will collapse and calls on the government to reconsider.
Why have you got your head in the sand? And why don't you step up and actually rescue these car dealerships and car manufacturers, protect these businesses, and give consumers what they want?
A government spokesperson told media the mandate for 2024 remains 22% and gives manufacturers flexibility to sell a range of products. Malcolm Hudson, NTD News, London.
So whether it's debt or inflation weighing down workers, many Americans feel like their nest eggs are just not enough. According to a new survey, it found that 4 out of 10 workers feel that they're behind on their retirement planning and savings. Another study discovered that the vast majority of retirees regretted not starting to save earlier. Now, experts saying that there's really no easy way for making up lost time, but there are habits that can help build now. One of those suggestions is automating savings. For example, deducting from paychecks or direct deposits or automated transfers. There are also catch-up contributions for people over 50 to add to their 401k plans. And finally, an ice cream shop in Taiwan has been promoted. And it's been promoted from Bib Gourmand to 1 Michelin star. And this makes it the world's first ice cream establishment to receive one of the most coveted stars of the culinary world. Chief Arwin Wan is the owner of Minimal, which serves a range of dessert and ice cream dishes. Chef Wan is also the former pastry chef of Sir, which is a 1 Michelin star restaurant. He offers a 7-course tasting menu featuring a multitude of flavors, including yuzu, red plum, and osmanthus, and the inspectors highly recommend the tea-based non-alcoholic drinks as well. You can experience all this for about $40 US.